I have read the transcripts and listened to the condensed non-stutter version of the call, baffled by the lack of actual communication of meaningful data. Out of curiosity, I set out to read the report. Then again, just amazed by the lack of actual analysis by analysts. I don't mean the pumpers, I mean real analysts.
Hello, this is Engineer Out. I'm in my garage right now, building some device to open and close the garden house windows in the summer for growing the tomatoes optimally. I like to build stuff out of scrap. So this video is a non-AI video. The only AI is the voice used in the clip champ because it's nice to use. And it's better in English than me, actually. So enjoy. And an advice, stay away from the man in question.
For clarity, you are free to believe Musk's extremely vague and historically non-fulfilled promises. Where the latest are about robots in the millions and cyber taxis in the hundreds of thousands on FSD and so on, you all know this, I don't need to spell the fantasies out for you. I can make one promise though, and that is the complete failure for FSD as Tesla is trying to do it. I have other videos on that. In this video, we only look at the actual historical performance of what Tesla has actually been doing reflected in the financial statement and also the projection on what they actually will do in the following year or two. Not the dream stuff, the real stuff, namely producing cars. Starting with the present, which have an enormous impact on the future for quite some time. Actually up until the board and owners separate Tesla from Elon Musk, kicking him out. Also, even a CEO without a complete psychological breakdown with 12 kids, almost as many women, and Twitter and gaming addiction. Even a sane CEO with a normal life could manage a company this size on a fifth of his total attention and time at best. So regarding coming years, and this is of course not reflected in the earnings call, people and companies are turning away from Elon Musk and his Nazi salutes and the brand Tesla. To the numbers. First, Tesla is losing ground big and fast everywhere, except in China. BYD surpassing as we speak. In China there is an increase in numbers, but of course EV market have exploded in China, so a big drop in EV share for Tesla. And share of EV market is really all that counts. As can be seen, market share lowering elsewhere quite rapid and on a growing EV share. Despite enormous discounts all over the world, making a Tesla value for money extremely good. Note that zero interest on loan on Tesla began a year ago in China. As seen in the EU, Tesla is more or less the worst performer of all brands that really counts, and also the very worst of all that actually competes in the EV market. Again, being the only one at this time with big discounts and zero interest loans. Both in relative and absolute loss of market share as shown. Also, as seen, Model 3 have increased relatively, which of course mean lower average sales revenue for Tesla. The discounts of course reflect in the massive increase of leased vehicles as opposed to sold, and the inverse effect on total leasing revenue. This, to me, would be two parallel lines, not two crossing ones. In particular with the high interest rates that have been, and is the case still due to inflation all over the globe. Also with the accumulating number of Teslas in North America and the reported progress on FSD and lowered price, and also free FSD, in some cases you would expect this graph to have a linear or positive rate of growth. Instead, it's declining in rate. It is not disclosed the money earned from FSD, but if we calculate the $99 a month times the 400,000 FSD users that is believed to be the case, that gives 500 MUSD per year. If we instead take $8,000 for purchase as average, since start we get 3,200 MUSD. So it seems not huge, but still in the order of magnitude with annual profits. The thing is that when FSD is revealed as a fantasy and is doomed to serve as a decent ice on driver's aid, the earnings from this goes towards nothing. As seen from the FSD community tracker, which is the best and only data source, and a reliable one for progress measurement. Not absolute value of the state, since the tracker encourages to not count all events, only the serious ones. Also, drivers are more tolerant to deviations as they get used to the system. Something the videos report. The diminishing rate of improvement, though, is evident. V13 a little bit better, if you really dive into it. But remember, the performance is improving by a fraction per version, and it lacks a factor of thousands or 10,000s to get to Waymo country. Again, we are discussing actual stuff, not future hopes and beliefs based on nothing. Actually, the data and technology speaks clearly opposite. Another thing is the Roadster deposits. These are the best numbers I have found. If correct, it gives in the order of 300 MSD, and since these numbers are extremely hard to verify, in simplicity, in the order of 30 MSD per year, just in return on invested means other people's money. So looking at the R&D, which is 3 to 5% of revenue over the years. 3 to 6% is the typical car manufacturer range. Mind you, Mercedes cars are not making FSD in that intensity or at all. No Optimus robot, no AI centers, no semi-trucks, no low-volume Cybertrucks, and so on. And most important, Musk says that Tesla is a technology company building for the future. At R&D level of any complacent car maker, struggling just to stay out of the red. A future-prone tech company not burning cash should draw your attention and raise questions. Here we see the importance of the carbon credits. It makes up around a third of the profits, actually. And this money is no more. A little this year maybe, but gone by 2026. It is clear to see how they kept up the numbers in relation to car margins. The energy deployment is some 40% of profit, but a small part of business. This is well known. However, the great variations in delivery of such systems quarter to quarter makes it easier for Tesla to obscure real numbers. However, it is, as many thinks, probably that easy to grow in this sector, and above all, the profit margins are falling or at best stagnant. To me, it indicates competition. Tesla was an early mover in this field. So this looks kind of positive, but the potential for any substantial, unclear. If, as Musk says, they are production constrained, why are the margins shrinking? Amortization and depricing assets is raising, but, as I understand it, typical for automakers in percentage. Perhaps it is so that there was a bit low earlier to prop up the profitability of the company. Sooner or later you need to start. So, obviously cost of goods are shrinking by keeping up doing the same thing in higher numbers. That's the basic principle since the days of Henry Ford. However, this year, in lack of positive spins, Tesla highlights this chart. Now, previous years this chart lacks a proper legend. It is hard to know the math behind it. By trial and error you can derive it from the finance tables. It is actually cost of production divided by number of deliveries, excluding leasing, which is a bit hard to grasp exactly if it goes in the nominator or denominator. As seen here, the leasing goes up and the car stock goes down when the cost of production goes down. The same type of chart, but back to 2021. Same thing, same conclusion. However, there are more reasons for these numbers, and we will come back to them in a minute. Calculating the actual cost for produced cars per quarter and adding average sales price according to finances give two main results. The basically constant production cost and the ever-shrinking margin by the need to lower the price of the products to maintain competitiveness. Now, these numbers are really quite stupid. Even the more correct recalculation I did with production and not deliveries. Over time, of course, production and deliveries even out. Why stupid? Well, the production mix and also the production country varies heavily. S and X are basically gone now, and the truck is produced in small numbers, but halted in Q4 building up stock. Also shifting to cheaper specs. Relatively more are produced in China due to the market situation for Tesla, and you would expect those lower in cost. So in plain language, Tesla smoke and mirrors. BS. What you really do not want to see is a graph like this. The revenue divided by the sales, normalized to median. It has a clear downwards trajectory. Just another way to state the previous chart of shrinking margins, which in practice says one thing. A new cheaper model built on the same platform and, to quote directly, achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes. What does this mean? It means revenue per vehicle produced goes down further, but they will be produced on the production lines currently underused, which mean that the production apparatus expenditure will be moderate. 50% growth, Tesla says here, for 2025, without really investing in factory capacity. Let's look at that. So a new Model Y might elevate those numbers a bit, however the downs for Tesla are much greater. More competition, pricier car, Elon Musk, trade wars, drop tax advantage in US. Now to start, Model Y new is not in production all of 25. The simple Tesla is said to be half of 25. So forget 50% in 25. It's pointless. Say 26 instead. If Tesla builds the simple model, you would assume only one site the first year. Even if using all free capacity, Tesla have around 30% to go with this platform and only about 10% for a single site. So there will be no 50% growth in 25 nor 26. It is actually mathematically impossible given the constraints. Also, they claim to start the stupid cab production 25, and there it goes really blurry. Now, the Juniper Y is coming. Priced higher and now with a turn signal stock, which obviously couldn't have come cheap, right? As per reviews, it seems to be a better built car, and on the same platform, I bet it is actually more expensive to build. Why else increase price on a highly competitive market? However, when the smoke clears, it might just be the same. What is even worse for Tesla is that within a year, carbon credits, as we touched before, is gone as a source of income. It is actually a necessity for manufacturers to comply to the fines that actually is established EU law. The fines is in the order of producing a small car per car. Also, the US-based is removed by Trump. As seen here, the manufacturers need to double EV sales in Europe 2025. So the competition in EU will be absolutely fierce. We are already after New Year instantly getting $15,000 discount, zero interest, and whatnot all over Europe. In US, the $7,500 advantage for US made is gone. It does not look good. Looking at Tesla's overall finances, looks not crap as a situation. However, nothing is saying growth. Growth can only come from a new car model, and no person has seen it other as text in an earnings report. So if they're actually building it, as they say, at a bit high cost based on existing platform, it will not see any numbers this year. Next year at best. Although it would not surprise if it is a super low-spec Model 3 that is coming. If at all. Elon have never before under-declared a coming new model. Normally, it is half a decade ahead. But the most worrying for Tesla is Elon Musk. How this person with only about a tenth of ownership can intimidate a whole board and others, though they all must see as craziness and disillusions. Apart from the obvious lack of actual competence. This is the most mind-boggling I have ever come across in business on this level. And for God's sake, he is not an engineer. He has no training, no degree, no experience from practical engineering of machinery. He lacks all engineering knowledge on a fundamental level. Evidently, he lacks the skills of leading engineering teams also. The ultimate proof lies in the FSD attempt, the Cybertruck, the non-Hyperloop, the non-Mars rockets, and the unseen Roadster, and so on and on and on and on and on and on and on. So if you want to follow a fool into a monopoly robot and robotaxi future in a distant future, please do so. But then stop making videos on the actual Tesla actions. When there are 40 more robots today like Optimus or better and completely safe Waymos on the road. And for the final, the Cybertruck. Elon's pride. Sold some 40,000 this year and diminishing in numbers and in price. Reasonable dev cost $1 to $2 billion and the sales over 5 years give in the order $10 to $20,000 per vehicle before buying the parts. Add up until now massive rework. The truck will never be profitable.